Are running absolutely wild in crypto markets, with Bitcoin having pushed just under $90,000, now down to $87,300 with a bit of a pullback. And consequently, with the crypto markets, you are seeing a lot of red, and these are typically the days that you want to buy. So in today's show, we're going to go through, is it a good time to is the local top in? Are we going to be looking for a prolonged pullback? How far do we still have to go within this particular crypto cycle? Smash the like button, hit the notification, and subscribe to the channel if you're not already subscribed. We have a lot to discuss in today's show. We're also going to have a look at the big moves that the US government are going to be making into crypto, and how, when that probably comes into fruition, well, that might mark a major top within the cycle. But until that happens, there is still nothing but opportunity within the markets. If we look over here at the liquidation levels, you can see that we have on the last 24 hours yet another $900 million worth of liquidations. I'll remind you that the day before that, the prior 24 hours before that, we had over $1 billion, which was actually the largest liquidation event that we've seen in Bitcoin's history, or in crypto's history. Remember, as the market cap grows bigger and bigger, it's going to be common that you keep setting records in terms of thousands of dollars increases per day in the Bitcoin daily candle moves, as well as in the number of liquidations that actually take place within the market. The important thing over here is to also look at the ratios, right? The 24-hour long to short ratio, you can see is sitting with the majority on the short side right now, almost 51% to 49%, which are long, right? So 51% of people running shorts, 49% currently looking to go long within the market. And in trending moves, you tip to stay in alignment with the trend, which means it could create the opportunity for yet another squeeze. Now, no doubt that there was absolute FOMO in the market over the last couple of days, and you can actually measure this as opposed to thinking about how you felt emotionally. You can actually look at data, and one way that you can look at it is looking at the 𝗕𝗬𝗕𝗓 letter over here. He says, in case you're wondering how real the FOMO in crypto is right now, well, you can look at the Coinbase app ranking, right? It just became the second most downloaded finance app in the App Store, and that tells you a lot, right? Just last week, it was the 33rd most downloaded finance app. That was when Bitcoin was still trading around that $60,000 region, and now obviously pushing all the way up to almost 90,000. It took it to second place, right? So let's see what happens. We'll track this. Typically, when Coinbase becomes the number one downloaded app, as well as things like, Robinhood and then the Phantom wallet, this starts to become a warning sign for the crypto market. We also saw that the funding rates went absolutely crazy. The funding rate shows how much leverage people are taking out, how much money people are borrowing from the exchanges to go long on market. And if we look at this, yesterday, the funding went as high 70 to 100%, and then it dropped down to 10 to 30% annualized. So the dip has completely reset the funding, which is a very healthy sign. You're going to see this theme play out throughout the majority, especially towards the end. Those funding rate where the funding gets heated is going to become more and more extreme, right? So it's really important that if you are trading on leverage, you really trade responsibly. You need to make sure that your liquidation levels are way below where price currently is trading at. And you have to ask yourself, at what level should the liquidation price be to make it nearly impossible for price to get to that point. And even if you do have a stop loss in place, you have to understand the risks involved, that in a mass liquidation event, when you see the likes of almost $1 billion worth of liquidations in a 24-hour period, sometimes those stop losses on exchanges don't even trigger, right? Because in order for a stop loss to trigger, there has to be somebody else on the other side of the trade that wants to go long. If everybody's jumping into the short side, there's no positions to fill the long side, and therefore it will slip right through your stop loss, taking you out of your position. So I'm encouraging responsible trading over here, guys. Please do be careful when it comes to leverage within markets, right? We also have that CME gap on Bitcoin, which is still sitting between 77,000 $695 and $81,030, right? The CME gap is created when there is incredibly bullish price action over the course of the weekend, right? Because the CME markets close on a Friday, and then they reopen on a Monday. So if something very bullish happens over a weekend, it creates a gap. And typically these gaps refill, right? Which means there's a possibility that Bitcoin dips down into that CME gap around $78,000. And that would be your buy the opportunity, right? Depending also on which coins you're looking at. That could be another 10% down for Bitcoin from current levels. So please do be prepared and always prep for the worst case scenario. That would be in a worst case scenario situation. There's also a fair value gap as well over here, which we can look at. So a lot of different gaps in the room with us today, but there's your fair value gap. You can see already tested a little bit of that. So we'll see if that holds up in the coming days and weeks, right? This is the 4-hour time frame. Now, Wednesday traditionally is one of the days where you see the most number of down days within markets, within the crypto market specifically. So I would say if bulls can hold up and defend throughout the course of today, Thursday will be another day, another opportunity. A big reason for the markets de-risking right now do with the CPI inflation data, which is going to be coming out later on today. If that CPI data comes out higher than expected, it might show that inflation is creeping back up, and consequently, the Fed would be less likely to cut interest rates. And if they don't cut interest rates, it creates a pressure situation for the market, which makes it incredibly difficult for risk-on assets to move towards the upside. So a lot that we have to look at over there. Let's pay attention as the Fed comes out with their information. That's either going to create price or drop price down into the 79K region, or alternatively, we're going to hold up over here and then probably mark up. Now, we want to really look under the hood to see if things are still relatively healthy. And one of the metrics that I've been using for quite a long period of time is the daily exchange volume with the 7-day moving average. To look for sustained momentum and continuation of the move, we typically need to see the 7-day moving average continuing to trend towards the upside. Now, this is very much in a strong trend right now, right? It's pushing up between, initially we were looking between the $50 and $75 billion mark. You can see where it's tracked all the way to now. We're sitting at $82 billion worth of volume coming into the market on that 7-day moving average. If we look over the 3-month time frame and then the 12-month time frame, you can see every time we've attempted into these zones, we've rejected. We got very close in March to holding up within that territory, but as it tagged that $100 billion mark, it essentially rolled over. That was the major top where Bitcoin hit $74,000. And then we went into this 8-month long correction, which we've recently just broken out of, right? That's when we left that 74K region. That was the breakout from that. So we'll keep monitoring this so long as bulls continue to maintain this moving average towards the upside. I don't think that long or high time frame there's anything to right? Medium to high time frame, things are looking bullish, and the US are building the narrative even bigger and bigger, right? You have here from the Bitcoin magazine, just in Senator Loomis says that we can pass a strategic Bitcoin reserve bill within the first 100 days of Trump's presidency. Now, this would typically be the making for a cycle top. This ends up becoming a buy the rumor. The rumor's there now, right? So it's a buy the rumor situation. And then a sell the news event. Typically, this is what we've seen. We saw El Salvador attempt to enter into the crypto markets right at the top of the last cycle, buying exorbitant amounts of crypto at the top, marking the exact cycle peak, while simultaneously we looked at all the other various metrics, and we saw things like the app rankings within crypto placing in the top 5 across those various different app rankings. We saw YouTube views spiking to record highs for crypto channels. These are all various different metrics that we look at, right? Insane valuations for NFTs, things like that. So watch this, pay attention to this space, subscribe to the channel if you're not already subscribed, smash the like button as well. We'll pay attention to this as the market starts to approach what could be a potential top. And if this does actually get passed, I wouldn't be surprised if that is the sell the news event. But right now, it's just a buy the rumor, right? We can also look at Willy Woo, who's an expert on-chain analyst. His assessment of the current price action, it's very similar to what I'm viewing over here. He says Bitcoin price levels $88,000 to $91,000. So he doesn't believe we're going to hit that CME gap. Based on his analysis, we should continue to maintain between $88,000 and $91,000 and then push up to that $102,000 territory. That's going to be a major psychological shift within the market. I think that will bring mass attention. You can see the attention right now is still very, very flaky. A lot of new people coming in, dipping their toes. Price goes down one day and they're gone, right? Just like that. Very, very flaky retail participants attempting to come back into the market. But when you have sustained price action above $100,000, this is probably going to be the point in time where retail return in a big way. We'll witness the breakdown of the Bitcoin dominance, which I'll show you in a minute. By the way, that's pushing up to new all-time highs. And then we should see ETH BTC turn the corner from its low and start to move up, right? If that happens, altcoin season occurs. That's where all the altcoins outperform Bitcoin, and it's all happy days, right? We all celebrate, we bring out our bull hats, and we all have a fun party, right? So Explainer, what he's looking at over here is a couple of things. He says, you know, when you move into price discovery, and this is what I've said as well, it's uncharted territory. It's very, very difficult to determine where things are going to top. There's a couple of metrics you can use. He's given 2. I can actually give you 3. He says in these situations, in price discovery situations, you typically have 2 guides, right, in which you can find new resistance levels. One, you could look at Fibonacci levels or Fibonacci bands using magic numbers seen in nature. We know the Fibonacci sequence repeats in leaves, water, it's everywhere, right? And then you can look at real liquidation levels of market positions. I'll give you a third thing. The third thing you can look at is the expansion of the Bollinger Bands. When they start to expand to a certain level and you use a tool called the Bollinger Band width percentile, well, that will show you when the market's incredibly overheated. I do actually teach that in Wells School, by the way. There is a link in the description below. Those of you who do want to join my completely free crypto school, here it is. You have 21 days to sign up. You can pause the video, sign up while the spots are still available. We only take a limited of people, right? But nevertheless, let's continue on because I don't want to digress too much, right? So 88 to 91,000 was the first target. We hit it. He says consolidation should happen. This should probably, also in my own words, create another bull flag in the short-term bull flag, maybe on the 4-hour or 12-hour time frame, and that can cascade price up for its next leg, right? He says this is both taken from a local fib level and liquidation levels. This is where he's getting his next target, where most of the shorts have been taken up. It's the end of the compulsory buying from sellers getting culled, right? The short traders, which are coming back. The short traders are on their way back, right? I'll show you in a minute why. And if we look at this over here, 102K becomes the next macro fib level using the last cycle's high and this cycle's low. And he says, let's see when new liquidation clusters form around. Now that's the next target based on the fib level. So there it is. I've got 2 fib levels over here. One, I took his fib, which he's using from the prior all-time high all the way down to the low. That's coming in as the 1.618, which is over here at that $102,000 mark. So I can run. The other one that we're having a look at over here is the high, the low, and we already hit the first target over there, that being the 1.618, and we saw price stall and sell everything. This is incredibly off a huge cup and handle formation, coming off an 8-month long range. Typically in this environment, you expect price to rapidly expand, right? So we can pay attention as we hit this 102K level. The next level taken from here to here is going to be 2.618, which will be 113,000, right? That also starts to line up with those cup and handle measured moves, as well as the bull flag move, which is going to be over here, right? There's your bull flag, you got your pole, you got flag formation over here, and you measure up to the next pole zone. So all in all, lining up to a very, very similar area. Now, liquidation levels, he spoke about that as well. That's Willy Woo, right? Talking about you can utilize fib levels, and then you can use the liquidation levels. Most of the shorts will get taken out, right? We already saw a lot of these shorts getting taken out the first time, which is what got us just shy of that $90,000 region. But here they come back, right? We saw it over here. Almost 51 to 49% shorts versus longs. And if we go back over here, we can see visually where their stop losses are placed by these yellow bands. Now, this is just simply lining up with the trend. The trend is towards the upside, and therefore you look for continuation. I'm going to have a look and showcase to you where your invalidations are on the daily time frame, where the bearish case starts to take place, right? But as it currently stands, 90,678 is the level to watch. That is the big liquidation level, and therefore it lines up with that fib target around 102. You could be pushing up once you hit that 90K. It should catapult price higher, right? So a lot to look at. Despite Bitcoin's price rising, long-term holders are not showing any sign, right? We are in the greed zone, absolutely, undoubtedly. And generally speaking, it's not the zone where you want to be buying in. If you're new to the market, Unfortunately, you have to look to the laggards, the lagging coins. Typically, I don't provide that type of advice in a normal cycle. Instead, I recommend that people look to long strength, but it gets to a certain point in time where it becomes way too risky to long strength when it's in a parabolic advancement, right? So we're not in the parabolic advancement yet, but we're very, very close. You can look at the price cycle over here. This was 2017, where we were sitting in that green zone. And then later, towards the end of 2017, of course, when we went into extreme greed, that absolutely shot price up all the way into the end of the year, into the late 2017 phase, right? We saw the same thing over here in 2021 cycle. So you had the COVID lows, which took place over here, right? A little bit of yellow, green, yellow, green, yellow, green. And then quantitative easing, monetary policy and what the Fed are doing. We're looking for something similar to take place right now. So very similar, right? Green over there, green over there. When the Fed start to turn the taps back on and start to buy back assets, move from quantitative tightening into quantitative easing, we should see the next cascade towards the upside, moving into the blue, which is going to be extreme greed. And that's typically where you want to be a net seller, right? You want to start to exit your positions as opposed to buying. So point being over here, cool, take a little bit of profits off the table if you got in with us since the 16 to 18K lows. But otherwise, still hold some, right? Hold the majority of it for the next leg up, because that's what it's looking like. The other thing we can have a look at over here is as well from Khat. He says here, the long-term holders are approaching the euphoric zone at 100K. So when we hit 100K, that's where those long-term holders start to press into the blue zone, right? We transition from the green into the blue, and that's where the parabolic advancement starts to take place, right? But what's more interesting about this is he says in the past, when we enter into that zone, it led to at least a 200% price surge. That's for Bitcoin, right? But more importantly, that's typically where the alt season started to take place, right? That's where the total to altcoin market cap started to go parabolic. So if you zoom in over here and you actually have a look at that, you can see the transition with the vertical black line running down the screen over here. There, we're in the green. When you transition into that blue over here, that's where you get the parabolic advancement in the altcoin index, right? Look over here, green transitions into blue. This is where the altcoin index absolutely goes berserk towards the upside. We saw the same thing over here in the next cycle and the next cycle. And now we're waiting for that to happen right now, as this would occur if we cross 100, right? Similar to what I just mentioned before, sentiment-wise, it's a big gear change or shift within the market when the headline is over $100,000, and we have the likes of Elon Musk coming back into Dogecoin, right? Which is the Department of Government Efficiency. We'll talk about that just now. That starts to shift gears and get the market really rallying. So I don't think now's the time to be leaving the market. If anything, everything is on track exactly according to plan, and you should be looking at the next 25-ish days to be continuation high. And the reason that I say that is this is exactly what we saw in the price cycles. We're currently following the purple one, right? So I'll pop it on and off the screen there so you can see the differences. Cycle 3, we had a little bit dip, and then around that day 730, we started to mark up aggressively. Cycle 4, you know, we're following very similar to cycle 4. Cycle 4 never had a big dip. It just rapidly expanded over there, and we are currently situated on day 729. So remember, around that 730, you should see continuation up. That's going to be, you know, very, very soon, a couple of days' time. And we can start to warrant a little bit of caution 25-ish days from now. Part of what I like about that 25-day analysis is that typically when it comes to leverage trading, you don't want to hold high leverage positions open or swing leverage positions open for more than around 3 to 6 weeks, right? Because you can actually look at this over here where the funding rate does go positive. Price action typically appreciates for between 3 and 6 weeks. Sometimes it can go a little bit longer, sometimes maybe about 10 to 12 weeks. But typically, the rule of thumb is about 3 to 6 weeks. And then you want to start to look to close those positions, which is where Bitcoin on the timing scale has typically experienced a little bit more of a pullback, right? So if everything kicks into high gear, Bitcoin pushes over 100K, you know, you'd expect that at that point, that's where you're starting to look for maybe a little bit of a local top, right? For now, everything is still on track. Everything is fine. We can see over here, we also had the blue buy signal on the hash ribbons indicator a couple of weeks ago. I did outline this and I said very, very high chance that this will be the low and we will not violate that low. That was the previous low, which means you're looking to be fully exposed 100% long at this point in time. And your expectation is now we're actually going to breach this level and break out from the top side of the trading range, which should cascade price a whole lot higher. You can see I actually mentioned it in this video. This was on the 5th of November, so around almost 10 days ago. Almost 10 days ago, I said breaking Bitcoin could hit $80,000 sooner than you think. You can see Bitcoin price at that time was $68,000, and I was preaching this is your lost opportunity to get in before the big move. But what's happened now is also you can see we have the 200 MA and the 200 EMA, and you currently have them about to cross above one another. I saw this cross take place was over here. And you can see we did have rapid price appreciation from that point, pretty much from cross took place. Bitcoin led into 113% move, which is very, very similar to what's being outlined over here, right? You can see once you get into that euphoric zone, very quickly, price can move 200%, right? 100 to 200%. You do get diminishing returns as the market cap becomes larger and larger. But nevertheless, very, very exciting times. This was covered way back, right? We've really nailed every single step of this move. You guys know it if you've been here for a couple of months. Literally, we hit every single move to perfection. It's been really, really good. Now, a couple of warning signs, things that we need to look out for. As it currently stands, everything looks fine over here. Let's quickly just pull this across over here so we have it next to that chart. Where is it over here? Let's just line this up. All right, not over there. Let's go over here. Okay, let's just line this up. So we have the CME gap, 78 to about $80,000. And if you take a look at this over here, this is also going to be there you go. This is going to be your fair value gap, which is currently formed. We needed to wait for yesterday's candle close to confirm that. So you have additional confidence, which is a little bit higher. That's coming in that $80,000 territory. Now, I wouldn't rule out the possibility for price to come into this zone in the next couple of days. It's highly, highly possible that you see something like that. That becomes a dip buying opportunity. If you're lucky, you get a couple of scam wicks that run through. But daily candles, you want to see them closing above the pink zone over here at 81.5, right? That should fulfill this CME gap, which is currently in place. Remember, CME gaps, there's no guarantees. They fill a high probability of the time, but there has been occasions where they don't fill. Price front runs that. So never bet your entire bag on the possibility that it's going to come into that zone. There is no guarantee. Right now, I said a couple of warning signs. What are the warning signs? Well, we need to monitor how the next couple of days play out, right? The next 48 hours are going to be very telling in terms of what price is going to do. More specifically, the next 72 hours, right? Why did I say 72 hours? Well, currently we have one red candle. If we get this candle trading underneath that candle, that's going to be your second red candle, which would be more bearish, taking out that one. And then if we have the third red candle taking out the second red candle's low, and we start to hold underneath this level, that wouldn't be a death sentence yet, but that's three candles which would be consecutively low, which would be a bit of a warning sign. As long as it's closing above that 81,500, I would still warrant that it's possible that the fourth candle bounces price out of there and you have continuation up. And therefore, this would be my highest expectation, by the way, is that you hold this zone over here and you have rapid expansion as per the drawing, right? But if you have three red candles that come down and the fourth candle starts to open and close underneath this $80,400 level, which is the start of this expansive move where price ran up, that's a major warning flag, right? Then we may be going in for a really long correction, right? $70,000 becomes possible. You could even break all the way back into the trading range and revisit down towards the $60,000 to $65,000 region. And that means that it's going to take a longer time period for things to reaccumulate, right? I think that's uncharacteristic and it would be unlikely, but we do have to always plan for the worst, right? The most likely outcome is this. This is the most likely outcome. Dip into that zone. If you're lucky, you get a couple of orders filled between $81,000 and about $85,000. And then there's immediate absorption and price runs up. Therefore, I'm still 100% long. Just to be clear, I'm 100% long. I don't want any confusion over here. I always try be a straight shooter with you guys and tell you exactly as it is, right? Also, if you do pause over here for a couple of days, the good news is that it will start to pull all these moving averages up, which is going to be additional support. Now, this is the most optimal scenario for the bulls, is to just simply hold price action over here sideways for a couple of days, maybe even a week or so, allowing those EMAs to catch up, the moving averages to catch up. For the psychology also, this is a big thing, right? People underestimate the psychology. The psychology on this move up was shot, right? People couldn't believe it. Disbelief that price is trading just under $90,000 for Bitcoin, when just a couple of days ago, you could have got it for around $70,000. This is hard for the human mind to digest, a 25% move in a couple of days on such a massive market cap, at least asset in the world, right? So holding and pausing within this region is a very, very healthy sign. If you see something like that, this is what creates those bull flags. This creates reaccumulation, and this allows for the mindset of the average investor and trader to catch up and appreciate that this is now fair value. Fair value is where reaccumulation takes place, and then you look for the next move up, right? So that's Bitcoin for you there. Prepare your accounts, get ready. There's still plenty of opportunity, especially when it comes to the altcoin sector. We're going to talk about that in a bit, especially because of the Bitcoin dominance, right? Continuing to rip. How high is it going to go? We can talk about that as well. Get your accounts ready. If you have a look over here, there is an opportunity where CoinW, which is one of our sponsors, they partnered with us. They have a battle pool for $1 million, right? A prize pool for $1 million that you can win. If you are looking for a place to trade, check it out. There's a link in the description below. You can actually win yourself 1 Bitcoin as well. If you do go through to the link in the description below, it says over here, win a Bitcoin. So what you need to do, each of these exchange accounts that you sign up would be an entry per week into the Win a Bitcoin competition. So you use the link in the description below, come through over here, sign up to these, make a small deposit, take a couple of trades on there, go through to this page over here, guess what the price of Bitcoin will be on the 1st of January 2025. Whoever comes closest with that guess on Coinbase, it's on Coinbase's platform, you will receive 1 full Bitcoin, right? Remember, you can guess every single week with each of those exchanges. So the exchanges listed below qualify you if you have each of these exchanges. That's 1, 2, 3, 4 entries per week to guess until the first. The sooner you enter, the more guesses you get in, right? All right, let's continue. So there's a nice opportunity for those of you who thought you'd never get 1 Bitcoin in your life. Now, what about the altcoin sector? It's coming into a very significant place, right? Very, very, very significant place. If you look over here, you can see prior support, resistance. That's this white line over here. Now, in trading, you're looking for that SR flip, right? Support, resistance, flip. You can see the same thing over here, right? Resistance, support, resistance. It flips that region into resistance, loses it, resistance. And once again, you're coming back into that key zone. Let's take it a step further and just quickly have a look at the most recent range over here to see how does that line up with that 50% level. Let's see, we're going to look at the 50% level, and the 50% level comes right into that sweet spot. Now, the reason we're looking at others, because others isolates the altcoin sector away from the top 10 coins listed on CoinMarketCap and CoinGecko, the likes of Bitcoin, Ethereum, USDT, USDC, Solana, etc., all the big ones, right? So if the others chart finds support over here at this key level, this $240 billion level, this is where you could get rapid expansion. So if Bitcoin finds support in the key zones that we've outlined, and I said the most probable case is probably something like that. It's just a question of how much lower it goes. Does it fulfill the CME gap or not? You would expect others to do exactly the same thing, right? So you're looking for something like that, form the higher low, and then get rapid expansion. Again, there's always levels of invalidation. If you start to break below this $200 billion mark, of course, that's going to be incredibly troublesome and jeopardize when the bull run will actually take place, right? Then you're going to have to push things further to the right, sideways, and say that this is going to take longer. It's all going to hedge on what happens later on with the CPI data that's going to be coming out, right? Again, if the CPI is as expected, expect price to move sideways and continue to chop, allowing the psychology to catch up and create fair value in the market. if the CPI is interpreted as bad, it comes in higher than expected, you may go in for a deeper dip. But so long as you're defending the key high lows, things will still be okay. If it comes in better than expected, then it means that everybody is going to predict that the Fed are going to cut interest rates even further at the next meeting and possibly pivot to quantitative easing. And consequently, then you should see prices rallying, right? So another thing that we have to look at, we spoke about it yesterday, the white line is the Bitcoin price. The other chart over here is the USDT dominance, and it's come right into the key support. We said if this bounces hard over here, this will create a sell-off within the market. We're right at that key zone. But similar to Bitcoin, if Bitcoin holds sideways, that's actually bullish for Bitcoin, allowing the psychology to catch up. If we see the USDT dominance holding sideways over here as well, that would most likely lead to a continued breakdown, right? So right now we did get a bit of a bounce, but you can see it starting to sell off again. We're going to monitor this. It should form a trading range. If you can start to range between the bottom over here and the top over here, and the USDT dominance can chop around, simply the USDT dominance is a metric to show us how much money is being held in stable coins versus how much of that is moving into risk on assets, being the crypto market. If it flows out of stable coins and comes down into the risk on assets, we expect risk on assets go up, right? That makes mathematical sense, right? Because flowing into those assets. If this bounces aggressively and it takes out this 4.8% level and starts to close above there, then you can expect crypto is going to go down hard, right? And the reason that we look at this is because it's worked every single other time. Eventually, this trend line will be broken down. But if we look at this and we study what happened in the prior times, you can see all the major tops are marked. I did cover this in yesterday's show. Every test of this trend line, which was established since 2017, marked a local top within crypto. But there are a couple of differences over here. We have the 4-year cycle theory, which is currently on our side. Post-halving, when we study what happened over here, post-halving, the consolidation into that zone would be similar to this phase over here, right? The consolidation into, let's just quickly mark that off again. So the consolidation into that zone when we hold it sideways, which I said is what we're looking for now, led to the continuation up, right? So this was the sideways period. Let's just use our highlighter tool over here. The consolidation period over there, that was your Bitcoin price. It led to the next big move up, right? So we're looking and hoping, at least as bulls, for something similar. But remember, hope is not a strategy, right? You need to study the price action that's in front of you and make proper trading decisions. So as it currently stands, we're hitting that level. We'll continue to monitor it. It should line up nicely with what we're looking at over here in the next 48 to 72 hours, right? Because if Bitcoin is going to break down and USDT is going to bounce, it should happen in the next 48 to 72 hours. The other thing that we can have a look at to show you how the USDT kind of works, it's going to be a similar situation to what we saw with the VIX. The VIX is completely different in the sense this is the volatility indicator or index for the S&P 500. That is your futures chart for the stock market, right? Now, what we've seen is when the VIX also holds sideways and consolidates, grinding into these regions, which is what we want to see the USDT dominance do right now, then we saw massive moves on the S&P 500, right? The grinding into or grinding sideways over here typically shows that the stock market is going to move up aggressively. So we're waiting for that over there. And if you look at the stock market, it's also putting in a bit of a pullback. I spoke about this yesterday. We have the S&P 500 on the top left, NASDAQ on the top right, and then we have the Dow Jones Industrial Average on the bottom right over there. And we said what we can look at over here is a possibility where it comes 50% of the way into that candle. So on the NASDAQ, that would be like coming into that 500 region, right? And then you expect support to be found and things to move up once again. So I'm currently in a trade right now. I'm long on the Dow Jones Industrial Average, and I would be willing to allocate a bit more into this pink box, right? So if you have a look over here currently, and we study this zone over here, let's just quickly move that up. You can see using the price action over here with the previous tops, I have entered into one order already with this huge inefficiency candle, narrowly missed my previous order, but I would like to build this position greater, right? If it comes into this zone, watch for bounce level over there. If the stock market bounces from here, chances are you're going to see the crypto market do the same thing. If you do want to take this trade with me, right, I'm going to be layering the orders, into this zone over here. Let's just quickly move this up. Let's pull that up over there. 1 second. So if you do want to take this trade over here, that's going to be coming in at 43,540. That is for the Dow Jones Industrial Average. There's a link in the description below. The exchange that I trade the commodities on and the CFDs, the stock market, etc., is Prime XBT, right? They offer crypto futures. You have the stock market, so commodities as well, gold, silver, platinum, etc., as well as forex pairs. There's a link below. It will qualify you for a 20% sign-up deposit bonus, which you can use to trade with. So if you put in $1,000, you'll get $200, right? If you're going to trade long-term, I would recommend go for the 25% discount on commissions. That's going to save you a lot more money in the long run if you're a long-term trader. That adds up, right? All trades add up in terms of fees. All right. The Bitcoin dominance. This is really important to look at. And the reason being is as we study what happens over here with of course, the USDT dominance, if the USDT dominance can hold sideways over here and just consolidate, while Bitcoin does the same thing. Remember, we spoke about that. Bitcoin holding sideways over here, allowing the psychology to catch up. That could potentially lead to the breakdown in the Bitcoin dominance. The Bitcoin dominance is pushing up over here right now, back to new highs. But nevertheless, we spoke about the most probable area for a top to be found on Bitcoin dominance is going to be between the 60 and up to about, it depends on when it hits, but up to about as high as 65%, right? Because you have this downsloping trend line over here. If you look over there, there it is. You have this pivot level that I'm almost certain will reject price. So the reason I say it depends when it happens is because if it goes up in a straight line, that's going to be 65, right? If it happens over time and you do something like this, then it's going to be 64. So 64 to 65 would be the major top that I'd be looking for. I can't personally see it going much higher. And when it comes to the altcoin sector, you are still early, right? There's nothing to worry about. You have Elon Musk with the Department of Government Efficiency, Doge, coming in. Oftentimes, Elon Musk does mark a cycle top, but it's not lining up with the timing factors that we're looking at, firstly. Secondly, the other thing is that this is probably going to bring mass attention into the market, into the meme coin sector specifically, especially when Bitcoin is trading over $100,000, right? You can even see this is going as far as Trump's campaign selling Doge t-shirts, right? Doge t-shirts, Department of Government Efficiency, they're dead serious about this. Go look at Twitter. It's absolutely unreal. It's happening. This brings mass attention into the crypto markets. I've been looking on social media platforms unrelated to Twitter or X, Facebook, Instagram, etc. And I'm seeing a lot of people who have nothing to do with crypto sharing these images, right? Of specifically sharing this image over here. The good news is that this money will flow into our top altcoin picks, right? The likes of GigaChad, Popcat, Mog, Fog, to name a few, right? We have also, of course, 𝗕𝗬𝗕𝗓. There's a whole bunch of meme coins. If you want that full list, go back to one of the previous videos or join Whale Room, which is the private Discord, right? That's where we've dropped all of that. So that should bring a lot of attention. ETH BTC is still looking for a major bottom. I don't think that this cycle things play out the way that they have in the prior cycles, in the sense that we saw ETH, in terms of money flow, Bitcoin runs first, then ETH runs, then they talk about the flippening where ETH is going to flip Bitcoin. I don't personally see that happening anymore. ETH is becoming, less and less popular as a, top pick for higher beta gains, right? The market has shifted. It's more Solana now. The important point is that you always track how your chart is doing against Bitcoin. In this instance, this is Ethereum against Bitcoin, which is clearly going down, right? And it probably does trade all the way back towards the highs at some point, but you're probably going to get much higher gains out of some of the other picks that we've given you, right? Things like Solana as one example, maybe Sui as well. So if you have a look over here, speaking of which, here's Solana. Solana back testing the top side of the trading range. This is a very important zone where you'd want to see Solana hold up. If Solana can keep defending this 200 region over here, you might get a couple of scam wicks that come down. But as long as you keep closing above 200 over here, this is an important level where you're looking for a breakout and continuation, even as high up as 300, right? So we can go through some of the coins over here. We can have a look through some of the lists. Let's quickly actually go to a couple of those memes. Let's check on some of our top picks over there. So how's Fog doing? very, very strong, right? This is probably one of my top meme coin picks. You can see the bullish demand that's coming in. Look at those wicks. If this holds sideways, it's going to be really, really good for the long term. Okay, you got MOG coming down, hitting the 50% level. Of course, makes you feel very uncomfortable, but as long as it keeps closing above that 50% level, which is where price is currently at, that's probably okay, right? 𝗕𝗤𝗘, putting in a bit of a pullback over here. This is just an example to one of the whale room members yesterday who were asking about this, how you would take a trade on this. The 50% level is the most significant, right? So watch for this to come back down to 0.0426. Again, 0.0426. That's the level. Other picks, Brett, also one of our top picks over there, rejecting from the mid-range, coming down a little bit over there. We don't want to engulf not yesterday's candle, the candle that we put in on Monday, the big gainer over there. We want to see price continue to maintain above that. At this point, the top buyers are under immense pressure, right? And this is typical. The FOMO buyers that come into the market are already down 20% on a trade like this. And what they're probably going to do is they're going to sell at a loss. And oftentimes that's right where you see price rally back towards the upside, right? And then they end up chasing price. And that's how you get these wild swings within the crypto market. Okay, other ones to look at. Let's see. WIF is still looking good. One of the blue chip memes as well, holding above this level. I'm almost certain that majority of these will take out their highs, right? So yesterday we had a look at a little portfolio that you can allocate into. You want to allocate on the red days, 62% still before new all-time highs over there on WIF. Okay, other ones to look at. I think Bonk looking good as well, still holding up over there. Myro also looking good for reaccumulation over here. Ponky pulling back ever so slightly from the range highs, but I think eventually you're going to push through and have a breakout over there. PopCat, also some profit taking over there, but very, very choppy as long as this keeps ranging. Remember, we got into these trades all the way down here in the bottom of this box over here, which means if you did take this trade with us, you should still be up massively, right? You're still up 316% on that trade. So looking good. Okay, I see questions there on Pulse AI. I heard them looking to join forces with FET as well. This is what happened with a lot of the other AI projects. They're kind of all being engulfed by FET, and partnering with them, it dropped something like 80%. FET is looking decent over here. We can look at Pulse AI quickly, just see what that chart looks like. Pulse USDT. Let's go to this one on Mexi quickly. Okay, terrible, absolutely terrible. Market obviously does not like that announcement at all. I wouldn't be buying this personally. It's not looking good. When you see these candles come down, if it is going to be, like a stink bid buy that you get in over there, you'd expect on that same day that this should immediately close back up, therefore leaving that as a wick, right? Whereas that hasn't happened. That hasn't happened. Instead, this closed all the way at those lows. And to me, that's a bit of a warning sign. All right, what else? What else do we have, guys? Do not fade 𝗕𝗎𝗓. Yes, 𝗕𝗎𝗓 is in my portfolio. I have 𝗕𝗎𝗓. I do own 𝗕𝗎𝗓. We can have a look at the chart over here and quickly have a look. See how 𝗕𝗎𝗓 is looking. Down 14%. 𝗕𝗎𝗓 is Vitalik's cat. So for those of you interested, it's Vitalik's cat. The thesis is that when Ethereum starts to pump, then we should see a bit of a move from 𝗕𝗎𝗓. Let's go on a bit of a high time frame. Well, remembers we're very early into this, right? It's sitting at $6.76 million market cap. I think my entry on this is $6,000 market cap. So despite the chart looking like that, long-term consolidation, these are kind of those home run trades. If you got such a low entry like me all the way down here, you just kind of hold it, but still very, very much, I guess, as close to bottomed out as we can call it, right? Let's check Doge since, of course, we have the Department of Government Efficiency. Let's see how Doge is looking. It was very, very strong the other day. So yeah, only 1% down. That's pretty decent, right? So breaking out of the falling wedge, we spoke about that. We said this is where you gain your entry, the deviation back into this level over here. That was the trade over there. If you took that trade with us, you would be up 255%, 320 to the top. Very similar gains to what we put in on GigaChat, PopCat, and a couple of the other memes that we've been looking at. But you could get a huge cup and handle formation over here. Let's see if it takes out the highs. The interesting fact about Dogecoin is it's one of the only coins that every cycle it's taken out its all-time highs of the price cycle. And on top of that, it's especially when measured against BTC, one of the only altcoins out there that also takes out its previous BTC cycle high. So if you measure Dogecoin against BTC, every cycle it seems to take out the highs. I don't know. Maybe it's the Elon Musk effect. I don't know. We'll see what happens. We'll see what happens. All right. What else? We can look at EOS. EOS had a massive move. We spoke about this one a whole lot under the AI sector. Let's just quickly find that AI sector. And EOS, I saw it was pulling back a little bit this morning, but nevertheless, big move because you broke out of this parallel channel. Let's just clean that up. What's going on there? All right. You broke out of this downsloping parallel channel there. Huge move up, profit taking immediately. Now you're waiting for the sideways price action. Very similar to Bitcoin, right? Following a big move up on any coin, you want the market to digest that move and ultimately create a little bit of a trading range over there, hold sideways, and then the psychology catches up and you can prepare for the next big move, right? This is the important part of being exposed to the markets at the right time, right? There's a time and a place where you want to be exposed, and there's a time and a place where you want to be risk off. And I preach this in these videos, in all these videos, when we're way lower, guys, from even as low as 18K, then 25K was the next opportunity. Then I spoke about it at $40,000. Then I spoke about it at $50,000. Then I spoke about it at $68,000 here. And I kept saying, you know, all in. The risk to reward was much better to hold long on most positions, waiting for big breakouts because the bull market has started, right? Now we have about a year left of this bull market, 6 months to 12 months left for this bull market. And then that's where we have to change our tune and become incredibly cautious. I do encourage you guys, if you want to learn more, right? The blog posts are free. There's a link in the description below. If you go through over here, there's a link below. It will take you to, there it is, Whale Crypto Trades blog post. We're posting Monday to Friday over there with a lot of educational content. If you want to learn more, that's one way to do it. The other way that you can learn more is you can go through to the free Whale School, right? There it is, Whale School. Click on that. There's all the trade strategies. This is everything that took me from zero to, you know, many zeros, right? Many zeros after the number 10 with my portfolio. If you do want to learn how to trade like me, all the opportunity is there. Everything is there. That's it from me, folks. I'll see all of you on the next one. Have a great day. Let's see how the next 48 to 72 hours plays out. And I'll catch you on the next one. Cheers for now, guys.